Good morning, everyone, and welcome to Reset, right? In this class, we're going to be looking at how to invest, and I'm going to be talking from a beginner's perspective. For some of you that have already started investing, you would find this class as a refresher. For other people, it will be an insightful session that would help you get started in your investment journey, especially in the Nigerian capital market. So let's get right into it. I have a slide to project, a couple of slides actually, but
Bring some for her. Just bring them, please.
if you can please stay mute, I would really appreciate it so that you don't disrupt the class audience or the audio. Yeah, thank you.
Okay. Bring it down.
And another thing is if you can also please change the display name on your screen, change it to your first name, at least your first name, so that I don't have to, if I want to call you, I don't want to be calling iPhone because at some point I may call anyone to answer a question in the class. It's supposed to be a participatory class. Yeah. So I would teach, but I will also call people to answer some questions at some point. So if you would kindly change what is displayed on your screen to your first name at least, I would really appreciate it. Thank you very much. So let's start. Investing and finance for beginners, the fundamentals of stock, ETF, and fixed income. So those are the premise that we're going to look at in this class. Look at stocks, ETFs, and fixed income securities. So let's start. The starting point for all investment is budgeting. A budget is what tells you a lifestyle that is sustainable and one that is not. It is what tells you what you can afford and what you cannot afford. So the general rule that we advise for people to use is the 50-30-20% rules, where 50% covers your needs, 30% your wants, and 20% your savings or investment. But I always say that this is very customizable. You can customize it to your own particular need and the phase that you are in right now in your own journey. If you don't have any investment or savings at all, you cannot be spending 30% of your income on wants. Your want right now should be to have savings and investment so that if anything happens to your source of income, you are secure or you are guaranteed that at least you won't lack your basic needs. So 50-30-20 is just a generic rule and doesn't really apply to everybody. You must customize it to your own state right now. For some people, it will be 60-40. For some people, they are earning so little and they can only set aside 10% from their income for savings and investment. So for those people, it may be 90-10. For other people, it may be 80-20. For other people, it may be 75-15-5. You just have to 75-15-15. You just have to think about, or 10. You have to think about what works for you. So budgeting is how you plan your resources so that you can be in control of it. It's what gives you control over where your money is going and shows you what you can afford and what you cannot afford. So that is budget. I'll give a template of how a budget should look like. Your budget should look something like this. This is just a template. Again, it's not compulsory. For some people, your housing will not be 30%. Your housing may be 0% because you are living with your parents, or you are married and your husband is the one paying the rent, or you are living in a property that you built by yourself. So you are not really paying rent again. So for someone like that, 30% housing can be transferred into another bucket. You can transfer that to your savings and investment bucket such that you can now have 50% savings and investment. For some people, you don't have transport expenses, as it were, because the car that you drive, you are not the one who bought it, and you are not the one that even fuel your car. Someone else does that for you. Again, there are people that are privileged to have all of these things that most people don't have. You must understand where you are in right now and build your own finances from where you are. So this is just an indicative pie chart to show you what your budget should look like. But let's move fast to where we're here today. Creating your own investment portfolio. Your portfolio is like a basket. Look at these baskets in on your screen right now. That's what your investment basket should look like. You have different things. It's like a shopping cart. You go to Tesco or you go to Ebano and you start shopping from the shop floor. You start putting things into the basket. You're shopping based on your specific needs. I don't think anybody goes to the supermarket and just buys what is there without really, or well, let me not say everybody, because some people would actually do that. They just walk into supermarket and they just buy what they want and what they don't want, and they just keep buying and buying because they have money in their account. That's not the right way to do it. The right way to do it is you go to the supermarket with a shopping list or an idea of the things that you want. You may not know the brand. Maybe you want toothpaste. You may not know whether it's Maclean's that you will buy or you will buy what's this toothpaste again? Or Colgate. But you know that you need toothpaste. So when you go to the market, to the shopping floor, you're comparing those products against each other to know the one to select. That's the way it is as well. You go to the investment market with your investment goals in mind, with your investment needs, and you begin to choose products that will help you to meet your investment goals. In other words, that is why Mr. A investment strategy or investment basket may be different from Mr. B's investment basket because they have different needs and different goals. So let's talk about what are some of the factors that would guide your choice of investment. If you want to select investment today, what are some of the factors that you need to think about that would guide you in the right direction? The first one is age. For people that are younger, you are still in your 20s and you're on this call, you can take more risk than people in their 30s and 40s, right? Because 20s, the logic behind it is even if you lose the money, you still have time to gain it back. That's what we say within my space. If you lose the money back in your 20s, you still have a lot of time to gain it back. So your age determines the kind of investment that you will choose. If you're in your 40s or 50s on this call, that's not the time to be investing in high risk venture. You don't start cryptocurrency when you are age 55. You start it in your younger age. It doesn't mean that you now be discouraged say because you are now 55, you are not going to try it again. We can encourage people that in that age category to try again, that there is no best time to start anything than now. Yes, it's an encouragement that we give to people. But in the reality, in the grand scheme of things, it's always advisable that you pick investment based on the age category that you fall into. The second factor that determines the investment that you should choose, that should be in that basket, is your investment goals. Why are you invested? As I said, that what is coming to my mind is that meme. Why are you running? Why are you running? But then, why are you invested? What is the goal? Is the goal to be rich? Do you want to take advantage of the market? In stocks, there are two set of people that invest into stocks. They are the stock traders and the investors. The stock traders are more of the technical analysts. They look at a bunch of charts and graphs to speculate for the shares that will go up so they can take advantage of that market rise. So they see stocks, this stock is currently 15 naira. Based on our analysis, it will go up to 65 naira. So let's quickly buy. And once it is 65 naira, they sell and move to another one. Those are traders. The next set of people are investors. Those ones are there for long term. They are interested in dividend paying stocks. This company pays me dividend. This company is a defensive stock. So they just buy all of those stocks and stay there long term. They don't really mind about the short term volatility of the market, that the price is going down or up. They don't really mind. They are there to take advantage of the long haul. So you must know your own goal. Are you a trader in the market? You want to quick fixes. And it's not a bad thing. You know, we say this thing, don't look for quick money. But again, in a way, what is bad with looking for quick money? It's really not bad. It's just we need to put it in context. You can look for quick money, but you should also understand that when you're looking for quick money, you are likely to lose money quickly. So that's why we balance it within this space that we are in. You can look for quick money, But the reverse side of looking for quick money is that you can also lose your money quickly. High risk, high return. Low risk, low return. Understand your investment goal. The next thing that will determine the investment you will choose is your time horizon and liquidity needs. I've seen people that will say that, Mr. Shea, I have 1 million. What can I quickly invest the 1 million into that can give me like 20%? I need the money in another 1 month. And I will say, in another 1 month, go and keep it in your bank account. You're not going to earn anything. Or keep it in a mutual fund. You're not really going to earn anything significant in less than 1 month. If you put in a mutual fund today, you cannot earn more than 2%. That's the highest that you can earn in that 1 month on that 1 million. So you can as well just keep it. If you are looking for where you put 1 million and then the money, 1 million that you will need in another 1 month, stocks is not the place to put it. The 1 million you will need to pay your rent, stock is not the place to put it. The 1 million you will need to pay your children's school fees in September, 1 million is not the place to put it. Stock is not the place to put it. You want to japa and you've saved your proof of fund 10 million, 20 million. You now see someone that say, oh, if you put it in stock, stocks can quickly deliver. And you go and put your jackpot money inside stocks. I'm sorry for you. You will lose that money, right? Because the stock market in the short to medium, in the short term, a lot of times, in fact, short term, 60 or 70% of the time, you would lose money short term in stocks. It is long term that you now start making money from stock. Of course, we'll talk about that in detail in the next couple of slides. The next thing that determines the choice of investment that you choose is your risk tolerance. Some people, this thing is the way God made us. Some people are conservative. They don't, you don't, if you are like that, don't beat yourself up. That is just the way you are. Of course, there's some people that, as a result of their experiences, past experiences, experience of other people that they've seen, or the news that they've opened themselves up to, they are now very conservative and afraid to take risk. There are people like that. But there are some people that they have all the knowledge, but they are still very conservative. They rather just do fixed investments that will pay them 15%, 20%, and they are okay. They don't want to look for 50%, 70% gain, right? And it's also okay if that's the kind of person you are, conservative people. Then we have people that have moderate risk appetite, meaning that they are willing to take some risk, but not too much. But again, there are some people that are very aggressive in terms of their risk tolerance. They don't mind. I've seen people that will tell me, I have 5 million. That's all the money that I have right now. But I don't mind to put it in stocks or crypto. I say, what if you lose all the money? Say, well, I'll make another one, but I don't mind. I'd rather just lose it than keep it in a low risk investment. I just at that point I knew that, oh, this person's risk is very aggressive. Yeah. So the next one that determines the investment you should choose is your income level and cash flow. If your income is unstable, your portfolio should be more defensive. This is very important. If you have irregular income, meaning you are you are not in paid employment, you are an entrepreneur, you are a freelancer, you are a contractor, you earn money, you can earn money this month and next month you won't make money again. Your own portfolio must be defensive. What does that mean? Means that it's a portfolio that where you won't be losing money because your salary is already irregular. You now want to go and do investments that will also be high risk or not give you regular income. You don't want to do that. The last part is inflation and regulatory environment. I want to move fast right now. If your income is unstable, I just kind of defined what I said initially. If your income is unstable, you have to be more defensive. People with unstable income will generally be those self-employed with irregular cash flow, those who earn commissions. You work for a real estate business and you earn commissions, or you run a small business with fluctuating sales, or you depend on contract work. Your income is unstable. Because money doesn't come in consistently, you need your investment to be more liquid. That's the first thing, that is easy to access. You need your investments to be less volatile, not swinging up and down. And you need your capital to be preserved. That is, you have to protect what you have. So your portfolio may lean towards money market mutual funds, treasury bill, bonds, or high quality dividend stocks. So those are for people that have unstable income. So let's now look at, if you are ready to invest in stocks, what are the primary considerations and what is stocks generally? So think about this as your guide to investing in stocks. What is stock? To start from the beginning, stock represent fractional ownership in a company. When you buy stock in a company, what you are buying, what you're doing is you are saying, I am pledging to become one of the owners of this company. And we all know that a company can make profit or it can make loss. All companies sometimes at some point in their lives have made losses, especially when a company is starting. The first couple of years, the company will make losses. And there will also be times when the economy would have a setback that the company may also make losses. So things like that happen from time to time. When you are a shareholder of a company, you are pledging to share both the profit and the loss of that entity. So when a company is listed on a stock exchange, those shares can be bought and sold publicly. So when you buy stocks of a listed company, you gain in four ways. These are the four ways that you gain when you invest in stocks. The first way is through dividend, and your dividend is share of capital or share of profit. So the company that you have bought shares in at the end of the year, if they made a profit of like 1 billion, they can say that out of this 1 billion, we want to distribute 200 million to our shareholders and reinvest 800 million into the business. That 200 million distribution will now be paid to all shareholders in the company based on the unit of shares that they have. So when you see that the company has declared dividend, this is how the announcement would always look like. They will say XYZ company has declared 2 naira per unit for every for their as dividend, 2 naira per unit as dividend. So if what you have in that company is 1,000 units, the money you will get that year would be 2 times 1,000, which is 2,000 naira. That's what you get as your dividend. You cannot compare yourself to someone that has 1 million units. The person that has 1 million units will get 2 million naira. So your dividend is predicated on the amount of shares or the unit of shares that you have in the company. So dividend is the first way. The next one is capital gain, which is when the value of your shares rises. So let's assume that you bought Access Bank when it was trading as 15 naira per unit. Then 1 year later, the price of Access Bank went up to 20 naira per unit. What you have gained, that difference of 5 naira, is called capital gain. If you want to take that profit out of your portfolio, you have to sell some of your shares to be able to have access to that 5 naira per unit. It is not money that is paid into your account like dividend. Dividend is extra money. Dividend does not affect your shares. It's extra money on top of your shares that companies pay directly into your bank account. If you want to take profits that you have made from capital gain, you have to sell some of your shares to have access to that cash. The next way that you make money from dividend is through bonuses or bonus shares. Sometimes companies declare bonuses. They will say that at the end of the year, we are giving some of our shareholders 1 for every 4 or 1 for every 5 shares that they have. Let me ask a question. If a company declares bonus of 1 for 5 as dividend, and you have 50,000 units, how many shares would you get from that bonus? I need someone to type it. I need someone to type it out. So the company declared 1 for every 5, and you have 50,000. How many would you get as your own bonus? Is anyone writing it? Guys, I need you guys to respond. Is Wally? No, not quite. Shidima, 60, 10,000. Shidima, how did you get your own 60,000? The company declared 1 for 5. and you have 50,000, how many would you get extra? Excellent. I don't mean as the airport simplified it. It's simply 50 divided by 5. So what you have is 10,000. You have 10,000 units. So let me now ask a further question to see whether you guys really understand it. So assuming the share of that company is currently trading at 10 naira per unit, how much is the total value of your shares before the bonus and after the bonus? I want to see those two figures. The price, the total market price of your shares before the bonus and after the bonus. Write the answer. So I want to see two set of figures. Write it together as one chart. Yeah, I'm waiting. So what is the price, the market value of your shares before the bonus and the market value after the bonus? Who is right? Is anybody answering it? Excellent. Bukola said 250, 50, 500 before, 600 after. 500 before, 600 after. Excellent. Okay. So what you just need to do, I said you had 50,000. The market price is 10 naira before. So 50,000 times 10, that's 500,000 before. Then after the shares bonus was given, a bonus was given of 1 for 5. It means they gave you 10,000 extra. The total unit you have right now is 10,000 plus 50,000. That is 60,000. 60,000 times 10 naira market price. It means you now have 600,000. So 500 before, 600 after. So that is how bonus shares work. Thank you. So let's look at the third way that you make money from shares. That one is through rights issue. So the way rights issue works is the company may come and say, it's just like what FitSyn. FitSyn just did it a few weeks ago. They just came and said, existing shareholders, you can increase your stake. So if a company declares they offer you, let's assume you're an investor, you have 100,000 units of shares in a company. The company now says that you can have access to one for five rights issue. You already have 100,000. They now give you opportunity to buy one for every five. How many can you buy? I need that. I need you guys to answer. And this one, I'm probably going to call someone's name. Let me look for you people's name. How many can you buy? Abigail, how many can you buy? Put it in the chat box. Adewumi, or anyone that wants to help them, put it in the chat box. How many can you buy? I want you guys to follow because we are still going far. And I'm taking this approach because it's supposed to be a beginner's class, right? I want everyone to be on the same page as we progress. Emmanuel, thank you. Excellent. Incy Song, thank you. Yeah, Abigail, thank you. So you can actually buy 20,000. That's it. So we're all aligned. We all understand. I believe by now we all understand the four ways that you make money from shares. I've said dividend, capital gains, bonus, right issue. Those are the four ways that you make money from shares. Let's now go to the practical aspect of it. How do you buy stocks? Because this is where the problem is. Two questions that a lot of people ask when it comes to stocks is how do I buy it? And how do I know the stocks to buy? Or what do I buy? Let me use that as what. How do I buy stocks? And what stocks do I buy? Those two questions are the ones I want to answer in the next couple of slides. And I'll also show you one of my portfolio to help you see, have a sense of appreciation of how stock investing really works. The first thing you do is you open a brokerage account. You cannot have access to any financial services in Nigeria if you don't first open the relevant account. Just like if you want to, you can't take your money. Like now, I have 500,000 with me, and I can't just walk into any bank and go and dump 500,000 without an account that I have opened in my name first. So the first step is for you to open a brokerage account with any of the accredited brokers in Nigeria. There are over 100 accredited brokers, the people that are licensed to be brokers. You can, like the likes of Mary Stem, Cardinal Stone, um, Stanbic IBTC, Stockbroker, First Asset Management, ARM, even Bamboo. is one of the brokers as well. So you open a brokerage account, you fund the account, then you pick stocks. You can pick from income, growth, defensive, cyclical, or penny stocks. You can also use your broker's recommendation. So that's the way to buy stocks. Let's now look at how to buy stocks, how to know the stocks to buy, because this is where the problem is. It's not just about buying the stocks, it's knowing the stocks to buy and what to check before you buy the stocks. The first one is what I've called market capitalization versus the book value. So how do you know a good stock? You have to check the market capitalization of the company and the book value of the company. It's a bit technical, but I'll try to explain. What is the book value? The book value is the current state of that company. When you take the company's assets minus its liabilities, what you have left is what is called the book value or the net asset. So you have to compare that net asset to the market capitalization of the company. How do you calculate market capitalization? Market capitalization is simply the value of that company based on the market. So how do you do it? Let's assume you want to calculate market capitalization for GT Bank. How much is another way of saying how much is GT Bank worth as at today? How do you know how much GT Bank is worth based on the market as at today? Right? Is another example I can give is if you want to check the value of an asset, like the value of a building. Let's say you inherited a building from your parent and you want to check the value of that building. There are two things that you do. You can either use the value. Accountants in financials of company, they use historical cost. That is the amount you bought that building originally is what they are going to put in the accounting book. They are not going to change it. But in the real sense of it, you cannot use that book value. You have to go and find out what is the current market price of that property. That is what you are going to use. In the same way, that's what you are trying to do with this market cap versus book value. What's the company worth based on its books? In that book, the company will tell you how much they bought the asset. Maybe they bought it 10 years ago. That amount will still be static on their books. You can know that amount. But you now go to the market to find out what is the what's the actual cost of the business today. You now compare both value. If the market cap, the current market value is higher than the book value, it means the company has prospects to grow. It means it's a good company to buy. A good example, I did this for Boa Foods, and one of the Nigerian top companies. And when I did the analysis, I saw that based on Boa's book, the company is worth 730 billion naira. That's the worth of the company based on the book value. I looked at their balance sheet. Simply take out their assets from their liabilities. You see that they are worth 730 billion naira. But when I did the market capitalization, which is simply looking at what is the total number of shares that the company has in the hands of all shareholders in Nigeria and globally, the company currently has total of 18 billion 18 trillion or is it 18 billion shares. That's what they currently have. 18 billion shares is the total shares that Boa Food has in the hands of all shareholders. Then I looked at what is the current market price of that share. It was 732 naira that day that I did it. So 732 times 18 billion gave me 14 trillion naira. So the total value of Boa at that day that I did this analysis was 14 trillion naira. Market cap 14 trillion, book value 730 billion. You can see that the market cap is almost times 20 of the book value. So that shows that, oh, this is a very solid company. It means that there is a lot of investors' confidence in that company. The company is normally supposed to be worth 730, but investors are willing to pay over 14 trillion for the company. So that's a sign that it is a company that you should buy. The next one is the financial performance, which is looking at the books again and just comparing apples for apples. In the last 1 year, what is the financials? How much profit did the company make last year? How much did they make this year? How much they make 3 years ago? You compare year-on-year profits. You calculate the percentage and see whether there is increase or no increase. Another one is dividend history. Has the company been paying dividend consistently for the last 5 years? And these are all things that you can even ask ChatGPT. Like, did I want to find out whether GT Bank has paid dividend? I can simply ask, how much did GT Bank pay as dividend from 2020 to 2025? And that tool can give me the figures, and I can choose, okay, they actually pay dividend for 5 years consistently. So that's a good company to buy. The next one is historical movement of the share price. So I'll show you a tool that is called investing.com. You can use it to check. Let me know. I will stop sharing this and I will show you. Then I'll come back to share that again. I'll show you how to check historical movement of the share price through this tool called investing.com. Uh, Hold on, guys. Investing. Okay. So I wanted to check Boa Foods. You just put Boa Foods. That's it. So the beauty of investing.com is you can use it to check any stock as long as that stock is listed on any stock exchange globally. It's not just for Nigerian stocks. You can use to check. You can see all the companies that I've checked before. You can use to check for any stock. So now I want to, my goal is to check whether to buy Boa Foods or not. So I've put it, it's showing me this is the current market price of Boa Food, 798 naira. That's the current market price. By just scrolling down to what analysts are saying, the people behind these websites, what are they saying about whether to buy Boa Foods or not? Look at what they said. You come to technical analyst. Technical analysis says buy. Why? The target price of Boa, according to technical analyst, is 803. When they say target price, that's the price that we speculate that this share price will get to within the next 1 year. So it's currently 798. It will go to 803. At least that's like 5 naira gain that you can make on these shares within the next 1 year. That's for BUAF. So you want to check the historical movement of the share price to convince yourself further. You can click on historical data right on your screen. The historical data can help me see what is the history of the share price. How has the share price done within the last 1 year, within the last 3 years? Let me start from 2022, January. So date, I can change this to monthly. So look at it. Okay, started from 2024. As at March 2024, March 1st, 2024, the share price of Boa Foods was 379 naira 90 kobo. Then it remained constant up until like November same year, and then went to 415 in December and went to 418, then went to 414 in May. You can see that at some point as well it was going down and it went up, going down, going up, going down, going up. And then from December 2025 till date, it has stayed on this 798.90 kobo. It has not changed at all. So if you look at it, the trajectory of this stock, you see that at least almost every year it goes up. Yeah, it went up from 379 to 415. 1 year after, it went to 798. So the analysts are saying to go to 800 and something, 803 or so this year. That's an indication that it may be a good stock to buy. Let's continue our slides. I was talking about what are the metrics that will help you judge whether to buy a share or not. The next one is government policy and industry outlook. For this one, you may not be able, there is no platform for you to go and verify what is government policy around the industry that you are planning to invest into. There is none. But you must be following news. Most of us when we're growing up, we always see our fathers listen to news. They, For in my own house, my father used to take it very, very serious. Like once it's network news time like this, you can't even touch the remote or touch the TV for anything. You know, they I also see them getting serious with business dailies where they read news of what is happening to the stock and all of those things. So you need to be on the lookout for government policies that may be affecting or that may affect the industry that you are seeking to invest into. For example, in Nigeria right now, you see what is happening within the banking industry. Most of these banks have till end of next month, that's March 2026, for them to recapitalize. And what is happening? Where most of them would have to be demoted, if I can use that word. So there are three license categories right now within the banking industry. We have the international banks, national banks, and regional banks. International banks are those ones that can have branches out of Nigeria. For you to operate at that license level, you must have 500 billion. The next category is the national license that you can only operate within Nigeria. For you to have that license and continue to use that license from next month, you must have a capital base of 200 billion. The next category is 50 million for those that would do regional banks. You know, so what we are likely to see is some banks that are currently on a national license because they cannot meet up that 100 billion or 200 billion, they may be forced to become a regional bank. But I don't see any bank closing down. Of the current banks that we have right now, I don't see anyone closing down. What is likely to happen is that dumping their license for a lower tier license. So you must just understand all of these dynamics happening within the country, as well as another industry that's been a lot of movement is the energy industry. I've been going for a lot of energy conferences right now because opportunities are opening up in that sector. You know, you see that Shell CEO was in Nigeria to say that they are investing $20 billion into the economy of the country. And if a company like Shell is saying they want to come and invest $20 billion, then it's a signal, it's a sign that some things are really working that some people may not be seeing, right? And another smart move, if you really want to be successful in a country like Nigeria, is to look at what is what are the top people investing into. Who are the top people, the top business people? Otedola, Tony Elumelu, Dangote. What are those people investing into? Those individuals. Go and study what they are investing into and start to copy their own investment strategy. It looks like copy, but a strategic move. Another set of people is pension fund administrators, pension fund managers, the Stanbic pension. Those guys have a lot of money and they are constantly investing it into different asset classes to maximize return. So you can look at what are they investing into and just copy what they are investing into for your own personal life as well. The last part is leadership and corporate governance framework. I'm talking about how to know the shares to invest into. So out of all of those news now, away from all of this, what are the pathways to investing in stocks? And this is where we're going to do some sort of practical. I'll show you my portfolio to help you have a sense of what it looks like. So, non-discretionary stock investment portfolio. If you want to start investing into stocks, these are the pathways that you can choose. The first one is non-discretionary, meaning that from the word non-discretionary, when you are talking to your broker to open an account for you, you're telling them that just open the account, don't use your discretion for anything. I want to manage the portfolio by myself. That's what is called non-discretionary. The second one is discretionary, where you tell them to open the account and manage it for you. But for you to be able to run on this second one, your capital must be weighty. Some of them will not even accept a discretionary arrangement if you don't have up to 50 million. And it's because they will charge you management fee at the end of the year from whatever it is they make for you. The third one is equity fund, which is you now giving your money to them to buy stocks in the way they please. It's a bit different from discretionary. Under discretionary, they are buying the stocks in your name and managing it for you and charging you management fee. But for equity fund, they are taking the money from you and buying stocks. Equity fund, you can start equity with even 10,000 naira. They are taking the fund from you and several other investors and buying stocks as the underlying asset. Then they will be managing the stocks. Whatever it is they gain from it, they will share some capital appreciation with you as well as dividend, but the money belongs to them. The implication of doing equity fund, the benefit is that you have a skilled manager managing the money for you. That's number one. But the flip side of it is that God forbid that anything happens to that fund manager, because the money is directly invested into them, then your money is gone. But for non-discretionary or discretionary, because the stock has been bought in your name, even if the stockbroker declares bankruptcy, the stockbroker is nowhere to be found, you can still continue owning your stocks because you have bought stocks in different companies. As long as those companies are still alive and running, your stock is somewhere. You just have to go and trace it out, right? Which is why you need a CSCS account. I'll get into that at some point as well. The other way is through exchange traded fund, and the last one is hybrid fund. Let me quickly show you this non-discretionary portfolio that I mentioned. I have it with Cardinal Stone Partners. That's one of the guys that I use for my stock portfolio. Uh, sorry, guys. Mm. Sorry, I'm trying to log into the portfolio and then I'll project it. And this is to help you. The reason why I'm sharing this is first to help you have a sense of, for some of you that are still afraid to invest into stocks, to help you have a sense of appreciation of the kind of return that you can make from investing in stocks. So I opened this account less than 2 years ago, and the purpose of this account is the account that is a live account that I use for training, right? I like my audience to see what is happening. So you can see in this account, I have a total net worth of 30 million. Some is in equity fund. If you look at this total portfolio under stocks is 27 million. It means around 2 point something million will be somewhere else. That one is in equity fund. I will go and show you that bucket later. So you can see in this portfolio right now, the amount I actually invested is 15 million, but the return that I have made is 12 million. That is 81.73%. This is within 2 years. Again, stock is not something that you do and you expect to gain tomorrow. That's why I'm putting it in context. This is for people that want to build long term. You want to start and you want to build long term. So if that's taking me 2 years to be able to make 81.73%, put this in context. If it was 150 million that I invested into this portfolio, I would have a return of 120 million on it right now. You see why the rich are getting richer and the rest of the people will continue to stay the way they are because they have a lot of capital to invest into this. And it's also to say that if you don't have 15 million, you cannot start. That's why I said it took me 2 years of building it, this portfolio, for it to get to this amount. So in the days of 200,000, 100,000. So you need to have a consistent investment strategy. What's your plan? So let's say you have 1 million. That's all you have right now. First off, you need to create a diversified portfolio from that 1 million. I did a video yesterday. You may want to go check that out. So out of that 1 million, you put 500,000 in low risk investment, money market mutual fund, treasury bill, bond. 300,000 is what you use to create your stock portfolio. Out of that 300,000, you can divide it up to 50K and choose 6 stocks. 50K times 6 stocks is 300,000. That's how you will start your own stock portfolio. Then every month, as you get your income, a portion of it must also go into each of those portfolio. Maybe what you can afford to invest every month is 100,000. You now still split that 100,000 based on that 50, 30, 20 percentage. And for some people, I don't want to do high risk. I only want to focus on medium and low risk. So I'll put 50% in money market, 50% of my savings, of my investment in stocks every month, and I'm going to build from there. So that's how you build. You need to have the investment timeline that we advise for people to work with is always 10 to 15 years. So guys, I am not here to teach you how to make money within 1 year. So if you are going to follow me, if you are going to really make sense of most of the things that we share, you need to have that long-term mindset, right? Within that long term, it doesn't mean that you'll be growing. Look at this one now. I told you that within 2 years, I've made 81.73. To let you appreciate a sense of what I'm saying, this portfolio has just 50, 30 million. I have another portfolio that has over 100 million. Because I won't show that in a training class because you have to be security conscious as well. Right. But I just needed to show something for you guys to see a sense of appreciation of how stocks, the gain that you can make from stocks. So let's see, for someone that will say that, okay, I want to be able to remodel your stock and see, I want to pick some stocks from what you currently have on the screen. Let me show you the performance of each of the stocks that make up this portfolio. So these are some of the stocks. Access. Access Corp is the weighted WAC, weighted average cost, is 20 naira. Let me explain what that means. Because I did not buy this 93,000 units once. I bought I bought this 93,000 units in tranches, sorry. I bought maybe 2,000 units at some point, 5,000 units at some point, 10,000 units at some point. The implication is that I bought them at different prices. So maybe when I bought 10,000, it was 15 naira. I bought another 20,000, it was 17 naira. I bought another one, it was 21 naira. I bought another one, it was 23 naira. So if you want to find, for most of us that understand business mathematics, if you now want to find the average of that, what you will do is you will add all the prices that you paid for at every point in time that you bought, divided by the number of times. Let's assume that I bought it 7 times. I will now add all those prices divided by 7. Whatever I get is my weighted average cost. So the weighted average cost that I have paid in the lifetime of this Access Corp is 20 naira. The weighted average cost that I paid for Aradel is 588 naira. The weighted average that I paid for BUA is 187 naira. So think about it, guys. This is the power of starting early as well. I entered BUA in this portfolio, in this particular cardinal stone, when it was 187 naira and it's currently 798 naira. This was 2 years ago. The power of time and compounding. Yeah. So Arade is another stock. I bought it 588. Weighted average is now 997. Then Chams, Custodian, CWG, Dangote Cement, Dangote Sugar, ETI is EcoBank, Fidelity. This other one is FGS, is a bond. I think that I've collected the money that is due. I don't know why this one is still there, but it's still there. I've not collected. I've not sold it 100%. Then Geregu. The weighted average cost of Geregu is 336 that I bought it. So the goal of investing in stocks, right, the right way, is to increase your greens and reduce your red. Look at this column where they said gain stroke loss. You will see that if you scroll down, I'm scrolling down right now, you will see that it's only in one or two places that you can see red. Only two loss. I only made, out of a stock that has 20 stocks, there are only two that is not doing well, that I've made losses in. And when you even look at the amount of loss that I have made, it's very insignificant to the amount of profit that I have made from others. So let's take just one of these profits. Let me take this 156,000 naira profit. You can see that this 150,000 naira profit is even enough to net off the two losses. This one is 29. This first loss is 29,000. Let's say 30,000. This one is 19. Let's say this one is 20,000. So that's 50,000. If you take 50,000 out of this 156,000, it means I still have 100,000 naira gain. So my losses is very insignificant compared to the profits that I have made from this stock investment. So that's what I wanted you guys to see. So for someone that will say, which stocks do I buy? These are examples of stocks that I have bought that have done well in the last 2 years, that I'm almost confident that will do well over the next 2 years. By how well, I can't say. I can't say, oh, it will go to 1,000. I can't say that. But there is a way to know what it will go to have a sense of what it can go to. Let's go back to that portion. So most of the brokers that we have, they give you what is called stock recommendation. When you log onto the app, you will see the stock recommendation. This is for this broker. This is saying that we have done the research. This is what we believe you should be investing into. Again, there's also always a disclaimer because you cannot come and catch them. They tell you this is stock recommendation. You now follow it. You now didn't go that way. Now come and say, I will arrest you. I will sue you. No, that's why you can see this recommendation is for information purposes only. They now say read full disclaimer. It's just to save themselves too of wahala that, when it comes to money issue, people can be funny, right? So that's why they've given you that disclaimer. How do I go back now? That's why they give you that disclaimer in that place. Yeah, let me go back to what I was sharing. But I wanted to show you that, nonetheless, there is always, that thing has disappeared, what I was sharing. Nonetheless, there is always, how do I go back to, okay, and the back is not working. Maybe I have to log in again. Okay. Nonetheless, there's always a stock recommendation that you can actually follow. But I will now also show you what you can do to juxtapose whatever your broker has given as recommendation. Look at this one now. They said Access Bank is currently 24 naira. The target price, based on their own analysis, is that it will go to 42 naira. That's what they are saying, based on their analysis. FCMB is currently 11. It will go to 15. GTCO is currently 112. It will go to 128. Nestle, they said don't buy Nestle. If you have Nestle, sell it because it will go down. It's currently 2,600 to go to 2,100. UBA is currently 48 to go to 61. Airtel is currently 220, 2,270 to go to 3,900, and so on and so forth. So the recommendation is a long list of recommendation, right? So sometimes you may now want to say that, for instance, look at, they said Aradel sell is currently 997. It will go to 812. But someone like me, I won't sell it because I know that the prospect that has Aradel has, if I leave it, even if it goes down to 812 within this 1 year, I'm still in profit. Why? I bought it at 500. So even if it goes down to 812, because I know that if it goes down to 812, what I will now do is when it goes to 812, I'll buy more. I will not buy more at 997, but when it goes to 812, because I'm already in profit, I will buy more. Why am I going to buy more? Because I know that company has very, very good prospects. Something's in the pipeline. They bought asset of a major IOC. It's one of the top companies in Nigeria right now. They are doing a lot of movement is happening within the sector that they are in right now. So I'm not going to sell that kind of shares because I have that information. So those are nuances that you need to consider. So when you see your broker's recommendation this way, I want to say, should I just follow this recommendation? What is the further, what is the analysis that I can also do, assignment I can also do? I just don't want to follow my broker. I want to also at least do some sort of check as well. So that's where using investing.com now comes in. You can go to investing.com to check. Keep this in mind. They said Access Bank is currently will go up to 42 naira. Let's check what investing.com is saying. You can check Access here as well. This is you trying to compare what two analysts are saying so that you can make an informed decision. So just scroll down. These guys also believe that you should buy. Technical analysts, they said strong buy, strong buy. Why? But their own target price says 32 naira. But those other guys, the brokers target price says 42 naira. Their own says 32. So you now need to think about it. There is at least a point of parity between both of them, like a point of agreement between both of them. And that point of agreement is that the shares will go up. Another point of agreement is that it is recommended that you buy the shares. So those two is enough. But at least they differ based on the target price. Maybe one party decided to choose a conservative approach. Conservative meaning, let's not overstate. Let's just be safe. The other one says, no, let's go all out for it. So that's what has happened in that case. So those are small, small ways that you can know the shares to buy as a beginner in stocks. Let's continue because I still have a couple more slides to share so I can give you guys room to ask questions. You can start jotting down your questions. The approach will be if you want to talk, you raise your hand to ask. And if you rather just type out your question, you can also type out the questions. Anyone works. Okay. So the next one, I started by saying you need to diversify your investment, meaning that you need to create bucket list of investment. Don't put all your money in stocks. The other part of investment you should have is called fixed income securities. That's where you should put your 50%. For someone that is still in his 20s and has fairly developed appetite, you can do 50-50. 50% for fixed income, 50% for stocks. For someone that is in his 30s that doesn't have too much appetite for risk, you can be safe. 70% fixed income, 30%. For other people that have business ideas, who want to also try high risk ventures, you can do 50-30-20 or 60-20-20 or 70-20-10. In a way, you just have to create a mix of assets in your portfolio. Examples of fixed income security from the word fixed income. It means that you know what you are going to get from the start of that investment because it is fixed. Any investment that tells you that in the ad, they already tell you the yield is a type of fixed income. If you are doing government bond as at paid last year, December, Naira government bond, savings bond paid about 14% for 1 year. So when you see that investment, you already see that, oh, 14% is what I stand to gain. You cannot get more than 14%. And there's also that argument between some people, especially when this issue of tax came up. Some people have said, I think it pays much more now to invest in bond than to invest in something like treasury bill or any short-term rate. And I said, no, it's not. It's not true. And it's because a lot of people are interpreting the withholding tax percentage wrongly. So because withholding tax now is 10% on short-term securities like money market, treasury bill, commercial paper, or or even savings accounts, they will charge you 10% withholding tax. The way some people are interpreting it is 10% if the interest is 18% and government is going to charge me 10%, it means I will get 8%. No, that's not what it is. You don't charge tax on your principal. It's the same way. Nobody's going to debit your account. This nonsense that some content creators are saying online, they'll start debiting your account, they'll start charging you. No, nobody's going to debit your savings. Government cannot tax your savings. And I said you can go and tell them that I said it, that they cannot tax your savings. A taxable activity must have occurred before tax is chargeable. I'll say that again. For them to charge you tax, a taxable activity must have occurred. A taxable activity can be an income activity or an expense activity. Income activity. So if you make 500,000 as your salary, they must have taxed that salary. You have 9 to 5, you don't even have control on that. It's called pay as you earn. Your company removes the money and they pay you the balance. So what they are paying you at the end of the month is already taxed. Government, if you now take the 500,000 and save it and put it in a mutual fund, they're not going to tax it. What they will tax is if that 500,000 now makes another money in terms of interest. That's a taxable activity. It's not a Nigerian thing alone. It's the way it is everywhere in the world. So if a taxable activity now happens on that 500,000, you make extra 5% or 10% on it, they will now charge you. So let's assume you put 500,000 in money market. The money market now pays you 20%. 20% of 500,000 is 100,000. They will now charge you 10% on that 100,000. Whereby or thereby or therefore, what you now get at the end of that investment will be your 500,000 in full plus 90,000. You get 590. It is still better than doing government bond that will pay you 14% because it doesn't, it's tax-free. The ideology is that government bond is tax-free. So let's go and do government bond. Government bond is tax, but it's 14%. T-bills has tax, but it's 16% or 17%. It still pays more. So 17% is 1 point of 10 million is 1.7 million. If they take 10% of that minus 170,000, you still have 1.6, 1.630. But if you did bond, that is 14%, you only have 1.4 million. 1.4 million, 1.630. So the one with the tax is even still better. So money market, government bonds. Government bond, another type of bond is sukuk. And this is, I intentionally added this for those that will be Muslims on this call, because Muslims, you want al-hal, investment that is al-hal enabled or al-hal that is supported by halal. And for the benefit of those that don't understand what that is, halal is the opposite of haram. Haram is not permissible. Halal means permissible. Within Islam, it is not allowed. It is not right for you to charge interest. So because it's not right for you to charge interest, you should not also be receiving interest, because that makes you a hypocrite. If you're going to be collecting interest, but you don't want to, if you're going to be charging interest, but you don't want to collect interest, something like that. So you have to balance it. So which is why investment options like Halal Mutual Fund, Sukuk now came to being. So with Sukuk, you're not earning interest. You now be thinking about, if I'm not earning interest, what is now the gain for me to give? Because Sukuk is you giving your money to government to use for developmental projects. So most of you, actually, I think it's common in Abuja. I don't know. I think the only place I've seen it in Lagos is in Lagos Island. You see some roads that they will put a signboard, a green signboard, they write funded by Sukuk. So most of those roads that are funded by Sukuk, you give your money to the government, they use the money to fund that road. How would they now pay you? What are you now going to gain? If I give you 500,000, you give me 500,000 back after 3 years without getting any, it doesn't make any sense to me. So which is why Sukuk pays profit or rental. And the best way you can understand it is when government constructs like a toll gate, a road that has toll gates, right? And they collect toll from people, as your vehicle pass that toll gate, you pay toll. As you pay toll, when they gather all the money together, they can now pay part of that to people that sponsored that road. In the same way, that's the way Islamic banking works as well. If you go to an Islamic bank like Jais or Lotus and they give you a loan, it's not an interest loan. But how do they make money? It is on the profit that you're going to make on that transaction that they will make their they will make their own gain from, right? So then we have corporate bonds, we have infrastructure fund, and notes. Those are examples of fixed income instruments that you can try as part of that 50%. And we have treasury bill, commercial paper, certificate of deposit. I think this is the last slide so that you guys can ask questions. I've already spoken for more than 1 hour. Asset class. So these are the levels of diversification. You diversify according to asset class, according to currency, industry, and geography. What does this mean? You must not put all your eggs in one basket. As you're having mutual fund, have stocks. Minimum that every one of us should have is 2. That's minimum. Have money market mutual fund or treasury bill or bond, then have stocks or ETFs or index fund. Then the next dimension of diversification is currencies. Don't let all your investments be in Naira alone. Let some of your investment be in dollars as well. And if it's not feasible for you right now, because I know that this is a mixed multitude, it's a mixed class. There's some people that are still, I think someone even messaged me that he's still an NYC core member, and what a core member earns, I don't know, is it up to 100,000 right now? I know it's still less than 100,000. It may not be feasible for you to be converting, because to even get $100 these days, $100 is already like 1,400 and some, 140,000, more than 140,000. So it's not feasible for you at this current phase. But you can start with Naira investment and you have that goal. At some point, as your income starts increasing, you want to diversify per currency. Then we have according to industry. And this is very critical. One of the lessons I learned during lockdown was I needed to now start having investments in other industries that are not the industry that I'm used to. Before lockdown, I wasn't looking at pharmaceuticals until lockdown happened. They locked some of us down, but some people were making money. They called them essential services. Because of that experience, I decided to say, okay, I'm going to start buying stocks in companies like that as well. And those now formed my defensive stocks portfolio. Then, according to geography, at some point as well in your life, you must think about investing in other countries outside your country. And according to geography, it does not have to be country, so it can be outside your state. We've seen cases of people that when you go to IDPs is the camp where internally displaced persons live in Nigeria. It's common in the north. If you go to Borno and all of those states that has IDP, you would think that they are all poor people. No, there were some people that were very rich. They had a lot of money, but the challenge is all their assets was in the same location. They had a large expanse of land, farmland. They have their buildings there. They have their houses. They have all their money stored in the microfinance bank in that locality. Then Boko Haram took over their community, and now they have become displaced. They don't have access to anything that they have anymore. That is a sense, or that should tell us that we need to also diversify per geography. So what if they had some of their, maybe he has one property as well in Lagos. He could have as well just moved from the IDP camp to Lagos or to other parts of the world, right? So those are dimensions that you need to understand. Again, investment needs to be seen as a journey. And that's how I want people to always see it. It's a journey that you are embarking upon. You start from where you are, clear-cut strategy, and you start to build along the line. Thank you guys for listening to me. And I think that's the end of the slide. If you have questions, which I know most of you may have, you can please raise your hand. And if you rather just type the questions, you can type out the questions. I'll just read out the questions and answer them as well. Questions that you have that practical questions, you want to start investing right now. Okay. Let me read one question that I have here, and then I can see Bola's hand is up. I'll call you after. I upgraded from a custodial Nigerian stock account to an individual CSCS account. My new CSCS account is in my name, but my previous holdings remain in a custodian omnibus account, and I've been told they cannot be transferred due to structural differences. Is there any regulatory mechanism? Baba, this your English is too much, Steph. Is there any regulation mechanism of market? Hold on. Sorry, I'm struggling with. Is there any regulatory mechanism, e.g. of market transfer to move shares from a custodial structure into an individual CSCS in Nigeria? Or is it liquidation and repurchase? The truth is, if the players have told you, if you've seen that there are no, in Nigeria right now, there is theory and there is practice. There are a lot of things that there are no clear-cut regulations around, but it's just a new thing that a lot of people don't come up with that. So for something to become a regulation in a country, it means that there's been a lot of people that have been affected by that particular issue, and it has now come to the attention of the lawmakers. Maybe they want to change the law or issue a directive. So there are two things that can happen. There can be issuance of a directive, which the president can just do, right? But for you to change an extant law, it has to go through the National Assembly. It's a long process. So there are a lot of things that are not really legal or illegal, but they're not just practical. And I think this is where this case sits in between. So what I would advise you to do is, can you just sell off and repurchase another set of replicate the same set of stocks, because it's still going to be the same. Think about it. If you sell it today, it's the price that it is today that you will buy it. You can sell it off today and buy the same set of stocks that same day, so that you can at least cross this hurdle. Because if you keep going back and forth on, is this possible, is this not possible, there is no clear cut law that says it is impossible. But in practice, because a lot of people are not used to transactions of that nature, it may stop. So the easiest way is to take that approach. Nonetheless, you may also want to wait it out or speak to another broker. It may also be because of the capacity of the broker that you are talking to. They may be fairly new, maybe they don't understand that nature of transaction. So you may want to speak to another broker to see how possible that is. Um, I hope I answered your question. Which stock can you recommend for a beginner? I think I already gave a lot of stocks. I've shown you my portfolio where I at least over 19 stocks, except you joined late or you didn't catch that part. So it depends on what capital do you have. For example, there are some stocks that are very expensive right now that you may not be able to afford sizable units of those shares. If you want to buy a share like Airtel right now, that is already like 3,000 or so. So you may not be able to buy a lot of those shares. So what I would say for a starter, I've already shown you some of those key banks, shares that you can think about. I've shown you manufacturing companies like Dangote Sugar, Dangote Cement. I've shown you Boa Foods is another company. So those are three companies already. I've shown you Aradel, even though Aradel is built to go down in the short term, if you are there for the long term, it's going to be a good buy. I personally see Aradel becoming the next Seplat because the trajectory of Aradel looks very similar to Seplat. Seplat is the most expensive stock in the stock exchange right now. The Nigerian stock exchange is like 8,000 naira per unit. And that share started at maybe less than 1,000 naira when it started then. So for the long haul, I would say Aradel. Yeah, then MTN as well is also a good stock to buy. So, and another quick way that you can use is to look at your broker's recommendation. Yeah, the broker recommendation that I showed you, all brokers have it. Maybe I can also do after this call, I can download that broker's recommendation. I can just do a screenshot of it and share on the WhatsApp group that you guys have. I won't close that WhatsApp group at least for another 1 month so that in case you have any questions, if I see anything that I think will be helpful, I will share on the group. Yep. Bola, your hand was up, but your hand is now down. Have I answered your question?
Yeah, I've just put my good morning.
Mm.
So thank you so much for the session. I actually joined because of my daughter that I've asked to join. I want to encourage some of my other family members in Nigeria to start their investing journey.
Okay.
Um, I invest, elsewhere, and
Yeah.
I use a tax efficient brokerage accounts.
Okay.
I don't know whether I don't understand the Nigerian capital markets, stock market. So I joined to obviously gain some knowledge and obviously, to start, maybe doing some research and, guide, my family members, the right path.
Mm.
So are there tax efficient brokerage accounts in Nigeria?
Mm.
And also for them to start on the investing journey, would you suggest lump summing or drip feeding, into, just, you know, not put so much in, just, timing, maybe on a regular,
Mm.
basis, particularly for those who are on salaries.
Yeah. Okay. To start with your first question, in Nigeria, our tax regime, or tax, your fiscal regime, tax is not still as developed as those of the developed nations. So we are still trying to understand that landscape. Yeah. So what we have are just regular brokerage accounts. They're really nothing. You're not going to get any benefit, as it were, for using the brokerage account that we currently have. That's the first one. The second question, the advice is always to start at a level where you are comfortable. Don't put too much money, build over time. Yeah, rather than trying to put a lot of money because you want to take advantage of the market. You may be shocked, especially if you're looking at it from a short-term perspective. So the advice is start from where you are, start really small and then grow over time. That also give you that sense of making the mistake, understanding how the market really works.
Can I quickly ask, are there any brokerage accounts you can recommend? I know you mentioned Bamboo.
I mentioned Cardinal Stone is top of my list. Cardinal Stone is best as far as Nigerian is concerned right now. Is one of the best. Let me not say best because best is always subjective. It's because me, I like them and I use them and they have a lot of they send a lot of research to that just helps you understand how the market is working, what's the focus of the market, what's the current outlook. They send you news on a daily basis.
Okay.
The other platform I would say is Codros. Codros is also good. Meristem is good as well. Stanbic, there's really nothing spectacular about Stanbic, but Stanbic is a good one as well. And AfriInvest. AfriInvest is good too. So those are
Okay.
the platforms I would recommend.
Thank you.
You're welcome. Itoa, you're next. Are you there?
Hello, good afternoon.
Afternoon.
Thank you very much for the session so far. It's been very insightful. I think my question was going to be to ask about like platforms or brokerage accounts that we can use,
Okay.
but Bola already asked that and I already captured that. But another question that I want to ask is, I understand that the goal for this meeting is pretty much to help us get started, but
Mm.
are there times where you like offer one-on-one? Say, for example, we come to you, okay, I have this amount of money, help
Yeah.
set up the account or give recommendations, or what should I buy, what should I not buy? So
Oh,
is that like an add-on that you offer?
yes. So I have a one-on-one that are for people, it's for people that want to say that this is not enough for me. I really want to be handheld. I want to start. This is what I have. You know, That's we call it personal finance for a reason. It's because it's very contextual. What I've just shared in this class is very generic, is not tailored to your specific need. For instance, if you're coming to my one-on-one, first of all, I want to understand your risk appetite. I want to understand your investment goal. I want to understand what's your long term. For people abroad, as another question that I ask is what is your long-term goal? Do you want to live abroad? Do you see yourself raising a family abroad? If that is the case, then your investment strategy will be different. You can't do your primary investment place cannot be Nigeria if you want to live abroad and you are currently abroad, compared to someone abroad that is just abroad for short term and he or she wants to go back home in another 5 years. I don't see myself, I want to go back home. The investment strategy will now be customized based on your specific needs. Yes, that's a service I offer. You can send a message after the call to the WhatsApp number, and then my team
All
can pick it
right.
up further.
Thank you.
You're welcome.
Thank you very much. So I
No
think
issues.
another question I have is, do you have like a cost cap? So say for example, if someone is reaching out to the person must have, I don't know, 5 million and above, 2 million and above.
Well,
Yeah.
for that, I really do not. If you can afford to pay for, so I have two streams of service, just put that out, not like I'm marketing, two streams that I do. There is one that I do that is 45 minutes. So which is just for me to speak to you and just advise you, and then we get started. The other one is 1 month where we have 4 sessions and I just actually help you review your finance, create that bucket for you, open the necessary accounts. Is more intense compared to the first. So the first one for that 45 minutes is 250K. That's what it is presently. The second one is 1.5. So that's the fee, right? So, but I would always advise that first off, you have not less than 10 million to start with, to start that investing, because that is for me to create a structure, a foundation for you that you can now start building on. I need 10 million. If it's less than that, it's not that I can't do it for less than that, but it will be a struggle. That 10 million is not coming to me right away, is for the portfolio.
All right then. Thank you very much. I
You're
think that's
welcome.
pretty much it.
Thank you. Kende, you're next.
Yeah, hi. Thank you so much. I had three questions, but I think Bola already asked two of them, recommended
Excellent.
broker and then the lump summing. So the final question I was going to ask is, you had said something about, studying the strategy of how, like, really wealthy guys, how they invest, like
Mm,
where they put money and all of that. So I was
yeah.
going to ask, is there like a platform where there's some sort of declarations of where this person invested
Mm,
something, or is
okay.
this like just going on Google to like just do random searches about these people and where they invest?
Okay. there is a platform called, so these things will always come as a breaking news. It's not so much like there's a platform, you go and read what Dangote is going to invest in. There's nothing like that. It will always come like a breaking news. When you hear things like Otedola just bought 100 million units of XYZ company shares, that should place you on inquiry. Those guys don't just buy things. Do you understand? So they buy it because they see clear-cut opportunity in that space. And I think what happened with Gerego, a lot of people are complaining that they are stuck right now. Now was like Otedola led us on and let us down, right? So he owned up until I think 2 months ago, he owned Gerego. He brought it to the market for the first time in 2022, and the shares was selling at 100 naira per unit at IPO. And that share I bought when it was like 250 to 300. As at when Atedala exited, it was 1,150 naira. So if someone had invested 100 million from the start, that 100 million in 2 years, in 2, 3 years became 1.1 billion. That was the magnitude of growth that happened to that company. But then he exited and sold all his shares and quickly went to another thing. So now everybody is struggling to sell the shares. You can't sell because it's just the law of demand and supply. Is what happens if you understand what happens in regular markets, you would understand how the stock market works. It's not different, right? When there is a rush to sell, when everybody's trying to sell something, then it will be a struggle. Because everybody's trying to sell it right now, it's a struggle. Me, I'm not trying to sell because in a way, I've not really lost money. I bought it when it was 250, 300. It's now 1,150. When I'm ready to sell, I understand, I know the strategy to use is just to use the limit price. You bring down the limit price, you bring down the price below the market price, and you'll be able to, it becomes easier to sell that way. But for me, I don't want to sell, and I'm just waiting for the next playbook of the company, the new owners of the company, what's the responsibilities on them. And one news already broke, which is that the federal government, there's this long-standing debt within the power sector that the federal government just pledged to pay. They've issued bond to pay people in that sector. So when they pay the generation companies, of which Geregu is one of them, they can now make more investment into that sector. When more investment comes into the sector, the share price will do well again. So understanding of all of these things, you can tie pieces of news together. When you hear any news, the first thing that should be coming to your mind is, how does this affect the economy? How does this affect my investment? And platforms that can help you see those breaking news will be places like Nairametrics, places like Business Day, places like Billion. There's a website I also go to, billionaires.africa. It's also a good place for you to, I don't think they have and it's not on Instagram, it's a blog, it's a website, but they post all of this investment related news. So just follow those news and then you'll be able to make informed decisions. Dan Ladi, your hand is up.
Hello, can you hear me?
Sure, I can.
Okay. I've been delaying my startup for a while,
Okay.
and it was basically due to the attitude of people around me who are into stocks,
Okay.
and they are constantly in a rush to sell daily. When they notice a stock is kind of going down, immediately they start selling. You understand? So the anxiety, the way they make it look like a gamble, you know. So like it begins to look like kind of something like Bet Niger for me, and I feel it's not something I can
You can
do
handle.
due to their attitude, how
Yeah.
they go about it. You understand? So,
Yeah.
but after listening to this class and saying it's if you want it in a short term, it's actually not something you would advise. It
Mm.
should be something you do for a long term.
Mm.
So, in that regards, I want you to advise how to handle it in a way when maybe your stocks are going down.
Mm.
How should someone navigate?
Okay. Okay. So first off, you need to understand that your friends that you have talked about are traders. I mentioned that there are two sets of people that invest in stocks. We have the traders and the investors. The traders are more tilted towards looking at the short-term increases or decreases in the market to either take profits or stop loss. They just exit the market based on that. So that's what you're saying is common, is everywhere. It's not just in Nigeria stocks alone. There are traders globally in different stock exchanges. Then we have the investors. The traders are big on fundamentals, on technical analysis. They use a bunch of charts and graphs to make that decision. On the other hand, investors are fundamentalists. They look at strong companies, they buy the stocks and just wait the long haul. In waiting as an investor as well, it doesn't mean you don't have an investment strategy. There are some companies you need to have a take profit approach to some companies. So for instance, there are some stocks I bought. I know that once it gets to 200 naira, I'm going to sell. Whether it's still going up or not, it's not my business. I'm going to sell. So if it gets to 200 naira in the next 3 years, I sell at 200. I know that I've made enough profit from that company. I can move to something else. Stock should be seen as a means to an end. What do I mean by that? You invest in stock to raise capital so that you can invest in something else as well. When I wanted to buy my first property, what I just did was, what stocks can I sell that I've made enough profit from that I can take out to buy the property? That's the way you do this thing. You don't just, I'm not buying stocks for, not like my money will just be there, I'll just leave. When I say long term, it doesn't mean I'm just going to leave your money there forever and ever. In fact, the whole investment game for me, the whole investment for me is 10 to 15 years. This is going to be my 7th year of investing. I'm talking about intentional investment. I didn't start early. I'm very passionate about helping people to start early. I started after my 30th, my late 30, my early 30s. That's about 33 because I'm 40 now, right? So this is going to be my 7th year in investing. I only want to invest rigorously for 15 years. After investing rigorously for 15 years, then I would have built enough investment. I will now start living off of the return of my investment after those 15 years. So then I will now start, that's when you now say you are in financial freedom. At financial freedom, the return from your investment is sufficient to pay your day-to-day expenses without touching your capital. So that's the phase I want to get to. At that phase, I don't want to invest in investment again. I'm not reinvesting anything, right? You can do that as well. So you need to set a timeline. So the fact that we say something is long-term does not mean it is forever.
Yeah.
You must have an investment strategy. Your investment can be a means to an end. If you see any opportunity that looks very good, you would have the liquidity to take advantage of that opportunity. So that's the goal of investing. Yeah.
Thank
So
you.
did I answer your question?
Very well.
Excellent. Thank you. Let me read one question from Faith. Thank you, Mr. Shei, for a stock brokerage account. Is it expected one uses the same bank details depending on the number of account opened for the dividend to be received? Sorry. Well, I think you can use one account. So this is what I do. When I opened my brokerage account, I have a particular account, a GT account that I use as my dividend account. That is my personal strategy. This is not compulsory. It's not a law. It's not a rule anywhere. It's just a personal choice. I want to be able to track all the money I get from dividend. So last year, and I can tell you categorically that last year I got about 5 million naira from dividend. How am I able to know that? Because I have an account dedicated to dividend, no other money. If I get an alert on that GT Bank account right now, and I know that it's dividend, no other person has that account except the companies that I have shares in. Do you understand? So that can also be a strategy for you, but there's no rule around it. You can let them pay it into your normal account, your normal bank account. And for some reason, and I also do that because I said I'm on a 15-year journey. I reinvest all my dividend. As I get that 5 million, is that correct English? Sorry. As I got that 5 million last year, I didn't spend it. I bought other shares with that 5 million. So you have to just look at what works for you. It's at best. It's why we call it personal finance. You just have to create something that makes your life easy for you. Fayoshe. I hope this is not Isaac Fayoshe.
No, sir. No, sir. No, sir.
So tell me.
No, sir. Good afternoon. Good afternoon, Dr.
Afternoon.
Shea. Thank you
Afternoon.
so much. Thank you so much for this session, and I really appreciate this. It's been a long time coming for me. One of the most of the things I want to ask has been touched by Miss Bola
Okay.
and also by Miss Itonha. And
Okay.
I also want to appreciate you for this website, because one of the questions I wanted to ask, this investing.com. I think it's going to help me like make an informed decision, because I'm a sucker for savings, but at the same time I follow you on Instagram. I like I'm your follower on Instagram. Like I said, I'm a sucker for savings, but I also know that um you can't make headway with just savings, because most of the time I work and I put my money in the bank and just leave it, because I'm also a very my temperament for risk is very, 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 very low. It's very, very low. Because I work hard. I work hard for my money, and I if I want to take a risk, I want to make sure that it's a calculated and informed risk. And that is why I want to appreciate Miss Itonha for the question she put up regarding how like the amount you need to have for you to hold us by the hand. That's the monthly session and the 45 minute session, which is very, very good question. But for me, I'm also a beginner. Like I said, I'm a sucker for savings. My risk temperament is very, very low. I'm also a beginner for in this investment thingy. I just want to ask um for your take, because there are some stocks I want to buy, and coincidentally it's on your
Portfolio.